If you're looking to position your portfolio for long-term growth, 2025 is shaping up to be a pivotal year for investors. From AI-driven innovation to healthcare breakthroughs and digital infrastructure, some companies are perfectly positioned to dominate this next phase of the market cycle. In this video, we'll break down several of the best stocks to consider investing in for 2025, based on strong fundamentals, secular trends, and sustainable growth potential. Let's start with NVIDIA. Over the past few years, NVIDIA has evolved from a gaming chip company to the engine behind the artificial intelligence revolution. Their graphics processing units are now core infrastructure for AI workloads, powering everything from ChatGPT to autonomous vehicles to next-generation data centers. Their Blackwell GPU platform is expected to deliver massive performance improvements, enabling AI model training at scale while reducing energy consumption, a key concern for enterprises deploying AI. At the same time, NVIDIA continues to build out its software ecosystem, including CUDA, cuDNN, and AI-specific libraries, locking in developers and institutions around the world. Despite its massive market cap, many analysts argue that NVIDIA is still in a growth phase, given the total addressable market for AI infrastructure is expanding rapidly. This isn't just a tech cycle, it's a structural transformation, and NVIDIA is positioned at the heart of it. Another standout is Eli Lilly. This pharmaceutical giant has delivered one of the most impactful drug pipelines in modern healthcare history. Their GLP-1-based therapies, including Mounjaro for diabetes and Zepbound for obesity, are revolutionizing chronic disease management. What makes this even more significant is the scale of the market. Globally, over 1 billion people are overweight or obese, and treatment is shifting from lifestyle changes to medical management. Eli Lilly is also pursuing label expansions, meaning these drugs could be prescribed for related conditions like cardiovascular disease, sleep apnea, and metabolic syndrome, expanding their revenue potential even further. Add to that their Alzheimer's and oncology pipelines, and you're looking at a diversified pharmaceutical company with long patent life, high R&D efficiency, and a clear moat in one of the fastest-growing areas of healthcare. Now let's talk about Microsoft. While it may feel like a legacy tech name, Microsoft has quietly positioned itself as the utility provider of the modern digital economy. Azure, its cloud computing platform, continues to gain market share and is deeply integrated into global business operations. More importantly, Microsoft is embedding AI directly into its productivity suite. Think Word, Excel, Outlook, transforming the way people work. This makes AI adoption frictionless for millions of users and creates strong recurring revenue streams. And don't overlook its enterprise contracts and partnerships. Microsoft is trusted by governments, corporations, and institutions around the world. That trust is a major intangible asset that fuels long-term stability. Even outside of software, Microsoft is making smart bets in gaming with Xbox and Game Pass, and in cybersecurity, an area that's increasingly critical for both public and private organizations. A lesser-known but equally important company on our radar is ASML. If you've never heard of it, that's because it works behind the scenes. But its role is essential. ASML is the only company in the world that manufactures extreme ultraviolet lithography machines, or EUVs, which are required to produce the most advanced semiconductor chips. No EUV, no cutting-edge chips. That gives ASML an effective monopoly. Its customer list includes all the major chip makers, TSMC, Intel, Samsung. And demand is growing as nations and corporations ramp up chip production to support AI, 5G, autonomous tech, and more. Because of the complexity of their machines, some cost over $200 million each, ASML enjoys wide economic moats and long replacement cycles. It's a classic picks and shovels play in the semiconductor gold rush, and its order backlog is measured in years, not quarters. Next, let's revisit Amazon. While the company's e-commerce operations are well known, Amazon is far more than a digital retailer. AWS, its cloud division, remains the market leader and a massive profit driver. And in 2024, Amazon focused heavily on cost discipline, laying the groundwork for stronger margins in 2025 and beyond. But what often gets overlooked is Amazon's advertising business, now one of the largest ad platforms in the world. It's highly profitable, growing fast, and benefits directly from the massive data Amazon collects through its shopping ecosystem. Amazon also continues to dominate last-mile logistics, and its Prime membership creates sticky consumer behavior. With the rise of generative AI, AWS is rolling out model hosting capabilities that will drive further demand from developers and enterprises. If you're looking for a high cash flow business with diverse growth vectors and powerful infrastructure, Amazon checks all the boxes. Now, let's add two more names to round out this list for 2025, both with strong fundamentals and exposure to long-term trends. The first is Alphabet, parent company of Google. While it has underperformed in previous years compared to peers like Microsoft or Apple, Alphabet remains a digital advertising powerhouse with unmatched reach through Google Search, YouTube, and Android. Their investments in AI via DeepMind and Gemini are also beginning to show signs of catching up to competitors. Most importantly, Alphabet is now showing a greater focus on operational efficiency. With strong cash flows, a clean balance sheet, and share buybacks underway, the company may be poised for a re-rating if its AI products gain broader traction. The second is Brookfield Asset Management. For investors seeking diversification beyond tech and pharma, Brookfield offers global exposure to infrastructure, renewables, and alternative assets, all growing areas as governments prioritize sustainable development and capital spending. Brookfield has a proven track record of disciplined capital allocation, high fee revenue, and long-duration assets that provide steady income. It also benefits from rising demand for private credit and private infrastructure as public markets remain volatile. To recap, here are some of the top stocks to consider for long-term growth in 2025. NVIDIA for AI infrastructure, Eli Lilly for healthcare innovation, Microsoft for enterprise software and cloud ASML for semiconductor manufacturing, Amazon for e-commerce, cloud, and ad growth, Alphabet for digital ads, and Brookfield Asset Management for infrastructure and alternative assets. As always, this is not financial advice. Investing involves risk, and it's important to do your own research, consider your financial goals, and consult with a professional if needed. But if you're looking for companies with real competitive advantages, strong earnings potential, and exposure to the world's most transformative trends, these stocks are well worth a spot on your 2025 watch list. Don't forget to like, subscribe, and drop a comment below with the stock you're most excited about this year. Thanks for watching, and happy investing.